Hi everyone, and welcome back to another weekend market update. My name's Tim Fairweather. Some of you might know me as a team member from the Brooks Trading course. I also host live trading a couple of times a month in the Brooks Price Action Trading Room. But today we're going to look at a weekend market update for the DAX 40 futures. So let's go and take a look. Let's start with the monthly chart. I've got the cash index here, the DAX 40, which is still called the German 30. And you can see we've had consecutive bull bars closing near their highs and above the moving average. We're actually above the high of both of those bars. So if on the monthly chart, the bulls are able to close two of these closes above that prior high, that's going to make it difficult for the bears to reverse this down. What do the bulls see? Well, the bulls see a trading range and a strong breakout above, and they're probably looking for a measured move of that whole range. In the interim, they've got a strong spike, another strong spike, and this is probably leg 3 in a bull channel. This is a tight trading range, and it's coming after a couple of legs up, so this could be a final flag. If price breaks up to 2,000, it's probably going to come back to 19,000 and this tight trading range and go sideways. You can see earlier on the chart, the bull breakout failed and the bears got a bear breakout. It was a couple of legs down, became a wedge bull flag, a wedge bottom, and created several buy signals. But the price was very bullish here. Bears were not able to get back below the moving average. They were not even able to close this gap even after 3 strong bear bars. Now, I was surprised at that. Many months ago, I was saying I thought the bears would be able to get price all the way back down to close this gap, but I was wrong. Actually, it became way more bullish and it created another buy signal up here. Okay, well, let's have a look at the weekly chart. You can see that big tail on the monthly chart was 4 consecutive bull bars. That's very strong, consistent buying. Every low above a prior low, every high above a prior high, strong closes, and at least 3 above the moving average. So even though this pullback was deep, in my report, I said if this is a buy signal, then traders are going to start buying above. Some traders waited for another close, and then price took off. It closed way above, it closed near the high of the bar, and it created a gap between the breakout point. So bears that sold on this tail, who have to sell higher to get out, create buyers at this level. So that became a really good place to buy. This was a bear inside bar, so not a good sell below. That was also buyers below. And there was another buy signal, and traders bought above it. Now there's another pair of consecutive bull bars closing on their high. The bears see it as a possible wedge top. We've got a couple of legs up, 2 legs sideways, and maybe 3 pushes up to complete that wedge. It's an expanding triangle, but the problem is expanding triangles become continuation patterns most of the time in the wider trend. Here is a strong bull spike. Here's sideways. It's probably going to keep going up. What do you do if you're a bull here? Well, if you're a bull here, you probably use your stop down here. That's a lower low. That's a higher low. So if we go to a new high, break above it. If we go to a new high and you buy there, the stop has to be somewhere down here. And that's going to give you your swing target, which I've marked on the chart. And I think we'll hit those swing targets. Other traders might have bought this bull bar with a stop somewhere down here, and their target's a little bit higher. But I would be hesitant to have a target above such a big round number as 20,000. I think if we hit 20,000, we're probably going to start to go sideways. You can see when we hit 19,000, we reversed immediately and overlapped it. Now, one thing that can happen is that market often gets very close to a magnet or a big round number, and just before it's about to reach it, it reverses strongly. So always in long for the bulls on the weekly chart, a couple of legs up, there's nothing to sell, there's no sell signals, it's only limit order bears who are selling above bear bars, scaling in higher, who want it to touch that breakout point, which is what happened here. The problem for most traders is how do you manage it when that breakout is incredibly strong? So for example, you sell above the high of that bar, it's a strong bull bar, you get another strong bull bar, there's a chance that this can keep going up. What about traders down here who are selling above prior highs? 1 bull bar, 2 bull bar, 3 bull bar. What happens now? Do you keep scaling in? No, you're doing the wrong thing. There's a strong breakout. You need to get out of that position and switch to long as soon as possible. What can the bears do here? Well, it's not a very good sell above that bear inside bar. The inside bars are also magnets. So I'm expecting any breakout next week here to come back and test the high of that bear bar. One thing the bears also see is that every time we broke out to a new high, we closed the breakout point. New high, close breakout point. So I suspect that every time we get a new high, we're going to close these breakout points. And that means limit order traders are going to stay in the market, and it means the channel is going to continue. So that's the DAX 40 on the weekly chart. Here I've got the DAX 40 on the daily chart. We can see on Friday, it's a bull inside bar. It's another pair of consecutive bull bars, but the week started with a strong bull bar, went sideways and found more buyers. The bears were able to close this gap, and that's good, but it's not a great signal to get short. Some bears are trying to sell above, betting there's going to be a deeper pullback, but it looks like always in long, there are strong buy signals that are still in play, and I think the target's higher. And considering how bullish this spike was, and considering how many bull bars are in these spikes, it's really difficult to make money as a bear on these timeframes. Most of these pullbacks just provide better prices for bulls to buy. Now, can you buy above that inside bar? Well, a lot of traders will wait to see the follow through to decide what to do. And if there's a breakout above or below, it'll usually come back and tests the high or low. And that's because the inside bar hasn't broken out of anything, and traders want to see what the market is testing. So always in long on the daily time frame as well, better to be long or flat. At the moment, we've had consecutive higher lows. So if we dip below here, we'll probably find buyers. We've got a bit of space to the moving average as well. So if we're forming a channel, a lot of traders will wait to buy a pullback of one or two legs before entering. But you can see there's been such relentless buying that a lot of traders are afraid of missing out, and that forces traders to buy high and scale in higher instead of buying and scaling in lower. What would the bears want? Well, the bears want something like this. They want 4 bear bars all the way down to the moving average and closing that gap. One of the reasons I think that worked is there was a really big bull bar here, which is much bigger than anything in here, and that's providing a lot of profit for any of those traders who are sitting in that swing. The difference here is when you look at this swing, these bars are all small. This is just steady, small pullback bull trend kind of behavior. And that means that even though it doesn't look incredibly strong, keeps going higher. There's no climactic move up to force traders to take profit. At the moment, it's just steadily going up, pauses, dips below, and goes higher. That's the strongest kind of trend. And I think any bear that's sold here and expected to make money is hoping for an exit or a relief bar back down to below that inside bar before it goes higher. That is a warning to these traders like here, that even though bears here didn't get in, bears here got in. So they get trapped under a bar, then there's another bar, and then we go higher. So trapped under a bar, one more bar, and then we'll probably go higher.
Thanks very much for watching. I hope you found that valuable. If you've got any questions, please put them in the comments below. If you're a member of the Brooks Price Action Trading Room, then I'll see you live during the week. If not, I'll see you next weekend for the next weekend market update. Thanks very much for watching. My name's Tim Fairweather from Zen Trading Tech.